Welcome to Ditch Your Landlord, your guide to buying a home without losing your mind. I'm Chelsea Lindblad, your Real Estate Doula.
And I'm Marie Roy, loan originator with Direct Mortgage Loans. And today we will be guiding you through the exciting process of buying a home. The benefits of home ownership are numerous. You have a place that is yours. If you buy right, you have an appreciating investment. Yes, you can make money buying a home. And best of all, you start paying your mortgage and not your landlord's.
During this video, we're going to cover the following topics. We know your time is valuable, so we're going to be fairly high level on each topic. We want to give you enough information without overwhelming you. The first topic we're going to cover is going to be Introduction to Home Financing.
Then we're going to move into understanding your credit score,
Budgeting for your first home,
types of mortgages,
and the mortgage application process.
After that, we're going to jump into finding the right home,
Making an offer,
home inspection and appraisal,
securing financing,
and closing the deal. I'm going to cover the first 5 topics and Chelsea's going to cover the last 5. So let's jump in and get started with Introduction to Home Financing. So unfortunately, most of us don't have enough cash to buy a house outright. So we'll need to apply and be approved for a mortgage. A mortgage is a real estate related loan. Before you start browsing homes, it is so important to understand what you can afford. That is where a mortgage professional like me comes into the picture. Based on key factors including your credit, income, and debt, you'll work with a mortgage professional to see what loan amount you can qualify for. Other key factors in determining your mortgage amount also include interest rate and your overall budget, including what monthly payment you're comfortable with, and your available cash on hand for down payment and closing costs. Next, I'm going to jump into understanding your credit score. A credit score is a numerical representation of your credit worthiness, which is an assessment of how likely you are to repay borrowed money. Your credit score is used by lenders to determine the risk involved in lending your money and is a key factor in determining your ability to repay a loan and ultimately your loan approval. Lenders not only use your credit score to determine your eligibility for a mortgage, but also the interest rate you'll receive. In simple terms, a higher credit score can lead to better loan terms such as lower interest rates, higher credit limits, and more favorable repayment terms. Conversely, a lower credit score may result in higher interest rates and less favorable terms. What's your credit score like? Do you even know? Is it great? Great! Not so great? That's okay too. Let's talk about some things you can do to improve your credit score. You can improve your credit score by paying bills on time, reducing debt, avoiding new credit applications, and maintaining a mix of credit types. Paying your bills on time is the most significant factor in your credit score. Ensure all of your bills, including your credit card payments, loans, and utilities, are paid on or before the due date. Next, reduce your debt. Aim to keep your credit card balances low relative to your credit limit. A lower credit utilization ratio, ideally below 30%, positively impacts your score. Third, avoid new credit applications. Each time you apply for credit, it results in an inquiry on your credit report, which can temporarily lower your score. Limit the number of new credit applications. And last, consider diversifying your credit mix. Having a variety of credit types, such as credit cards, mortgages, and installment loans, can positively impact your credit score. However, only take on new credit if necessary and manageable. Other best practices include keeping old accounts open and regularly checking your credit report for inaccuracies. If you notice an inaccuracy, you can call and correct. By consistently practicing these habits, you can gradually improve your credit score, which can help you secure financing options and more favorable terms in the future. One more note before we move on. I want you to understand the difference between a soft credit pull and a hard credit pull. A soft credit pull, also known as a soft inquiry, is a credit check that does not affect your credit score. It can occur without your explicit permission and typically is used for background checks or pre-approval offers. A hard credit pull, also known as a hard inquiry, requires your explicit permission and is ultimately needed to make a lending decision. Please note that a hard credit pull will typically only affect your score by around 5 points, and this is required to be fully pre-qualified and ultimately approved for your loan. All right, let's jump into budgeting for your first home. There are a number of things to consider when you budget for your first home, but the main items I like to talk to my clients about are cash to close and your monthly mortgage payment. Let's start with cash to close. This will typically include three main items. The main item included in your cash to close is your down payment, which is a percentage of the total purchase amount that you will pay up front. This down payment lowers your total loan amount and in turn, your monthly mortgage payment. Quick segue here on mortgage myths. Many people still believe that they need 20% to buy a house, and that is just not true. Your down payment will vary by loan program and can be as low as 0%. Again, this is dependent on many factors including loan program, income, and location. Please speak to a trusted mortgage professional like myself to learn more about your unique circumstances. You might be surprised what you can actually afford. The second main item included in cash to close are closing costs. There are a lot of pieces to buying and financing a home, including lender fees, title insurance, and appraisal. These will all be included in your closing cost. The third item included in cash to close are discount points. Discount points, or points you might hear, is a fancy term for paying to buy down your interest rate, which ultimately lowers your monthly payment. Purchasing discount points are typically optional and are again based on your unique circumstances. This is something you will also need to discuss thoroughly with your lender. The next budget item I discuss with my clients is monthly mortgage payment. Your monthly mortgage payment will include your loan, principal, and interest. It will typically also include your homeowner's insurance, property taxes, and your mortgage insurance if applicable. Mortgage insurance is dependent on your loan program and down payment. When you and I discuss what you can afford, cash to close and your monthly mortgage payment are two very important factors. Balancing these two items is key in moving you forward. All right, so now let's jump into types of mortgages. There are several different types of mortgages. I'm gonna cover the four most common here. And the typical mortgage is a fixed rate mortgage, meaning the rate you agree to at closing is fixed throughout the term of the loan. The first type of mortgage I'm going to discuss is a conventional loan. A conventional loan is a mortgage that is not insured or guaranteed by the government. Instead, they are backed and serviced by private lenders, such as banks and credit unions. The requirements for a conventional loan, including credit and debt to income, are typically a little more stringent than government-backed loans. Depending on your circumstances, we can do a conventional loan with as little as 3% down. The second most common mortgage I see is an FHA loan. An FHA loan is a mortgage that is insured by the Federal Housing Administration, or FHA, a government agency that is part of the U.S. Department of Housing and Urban Development, or HUD. FHA loans can be a good option for borrowers with lower credit scores or smaller down payments as they have more flexible qualifying standards than conventional loans. The third mortgage program I would like to discuss is a USDA loan. A USDA home loan is a zero down payment mortgage for home buyers in eligible towns and rural areas. USDA loans are guaranteed by the USDA Rural Development Guaranteed Housing Loan Program, a part of the U.S. Department of Agriculture. In addition to having no down payment requirements, USDA home loans often have lower rates than conventional mortgages because the government is taking on the risks associated with lending. And the last mortgage I'm going to discuss today is a VA loan. A VA loan is a mortgage loan program offered by the U.S. Department of Veterans Affairs to help eligible veterans, active duty service members, and their surviving spouses to purchase or build a home. This is also a zero down payment mortgage for eligible home buyers and offers very competitive interest rates. There are several other loan programs available, but again, these will be dependent on your unique circumstances. Again, I'm going to keep stressing this. That is why it's so important to speak with a mortgage professional. All right, guys, let's jump into the mortgage application process. Timing is so important when buying a home. Many people Chelsea and I speak to are first-time home buyers. Unless they've seen their parents, other family, or friends buy, they have no idea what the steps are involved. And even if they have seen it, they don't know. And guess what? That's normal and okay. Typically, before we go shopping for anything, we need to know what we can afford, right? The same applies to buying a home. Before you fall in love with a home, please come talk to me. Working together, we will figure out what you can comfortably afford. This benefits you in several ways. You know what you can afford, you spend your time wisely looking at only what you can afford, and once I get you pre-qualified, you are considered a serious buyer. Any offer you make will hold more weight. The first step in the mortgage application process is talking to your mortgage professional about income, debt, credit, and your budget. This will help us get a better idea of what loan program might be best for you. After that, you'll submit a formal loan application, authorize a credit check, and submit income verification documents such as W-2 statements and pay stubs. Once your mortgage professional is able to verify your information, you'll discuss your results and your options together. Remember, your down payment and your monthly payment are a trade-off. If you want a lower down payment, you'll have a higher monthly payment and vice versa. Once you have decided on a loan program that fits your needs, your lender will issue a pre-qualification letter. And guess what? Now you're ready to shop. Once you find the perfect home for you with your realtor, you will submit an offer, and from there, your loan will go through processing and underwriting, which are fancy words, which essentially mean double and triple checking your eligibility for the loan. During this process, you may be required to provide additional documentation. Remember, the quicker you move, the quicker we can move. The goal is to work hand in hand to make sure you get your loan and get your home. Once your loan has been officially approved, it's time to schedule signing and closing. I'll let Chelsea touch a bit on that later. And speaking of Chelsea, I'm going to turn it over to her to discuss finding the right home through closing the deal.
It's super exciting once you get pre-qualified with a reputable lender like Marie and know that you can shop with confidence. Your first step is finding the right home. And as a first-time homebuyer, this doesn't always mean the dream home or the perfect home, but it's the right home right now. And it's better than renting and throwing all of your money at your landlord instead of gaining equity in your home. Now you'll have a built-in savings account basically, and you can cash out your equity when you're ready to move to the next home, maybe the dream home. Start by working with a real estate agent. Choose someone who understands your specific needs and is familiar with your desired area. They'll help you find and evaluate properties, making the process smoother than doing it on your own. If you have a friend or family member that's recently licensed to sell real estate or works part-time, ask them if they can refer you to a full-time, seasoned agent in your area. That way you can still work with your friend or family member that you trust and that knows you, and this ensures that you're getting the best deal possible with a local expert. They can work together. Once you find your real estate agent, it's time to set your priorities. Make a list of your must-haves and your nice-to-haves. Once you're done, review that list and see if anything can move from the must-have back over to the nice-to-have. Consider factors like location, specific neighborhood, proximity to amenities, your job, schools, etc., etc. Keep in mind, this doesn't have to be the dream home or the dream location. It has to be the right home for you right now. Now that you have your list and know your budget from the pre-qual process, you can start viewing homes that are attainable. Your agent should set up a search for you to preview homes online, and then together you can narrow down which ones you actually want to see in person. Step 2 is all about making an offer. Fast forward, you found the right home. Now it's time to understand the market value of that home. You're going to analyze comparable sales or comps in the area and consider current market conditions. Is it a buyer's market or a seller's market? Your agent will walk you through all of this and help you to decide how to write the offer. When you're writing your offer, you need to consider all of the components like price, earnest money, concessions, contingencies, closing date, title company, home warranty, appraisal, and so much more. This is just one of the many reasons to use a seasoned agent to guide you through each one of these steps and put all the puzzle pieces together. Even more so to help you negotiate. Depending on the current market for that home, you may need to be prepared for counteroffers before coming to an agreement with the seller. Or maybe you can come in with a really aggressive offer and get it accepted. These are all things your agent is going to go over with you. And keep in mind, this can change from house to house as well. Okay, so we're under contract, you've deposited your earnest money. Now let's move on to the next two major hurdles, inspections and appraisal. A home inspection is crucial. Do not skip it. Hire a qualified inspector to uncover any potential issues. This is also the time to get any specialized inspections done, like for your roof or a pool or maybe the AC. If problems arise, sometimes you can negotiate repairs or credits with the seller, but that often depends on the market and sometimes the mood of the seller. Either way, focus on the big ticket items, not the paint and the carpet. Those you can probably live with until you can afford to change them later. Your lender is going to order an appraisal to determine the home's value. If the appraisal is lower than expected, you'll need to renegotiate with the seller or adjust your financing depending on your down payment and all those other factors Marie talked about. So now we've made it through the inspections and the appraisal, and you need to secure your financing. Throughout this journey, your lender is going to be asking you for additional information from you to finalize your loan. Make sure you submit all required documentation in a timely manner. That means as soon as possible, so you don't hold up closing. Once you receive a loan estimate and a closing disclosure, you're going to want to review those carefully. Some things might have changed from the initial information you were provided during the pre-qual process. Please ask your lender as many questions as needed to fully understand the terms of your loan.
I'm going to quickly butt in with some things to avoid during closing. Please don't change jobs. Please don't buy a car or open another line of credit. Please make all of your other payments on time. Doing any one of these things will affect your credit and your ability to close on your home, and we would hate to see that.
Repeat after me. Thou shalt not do anything without calling my lender first. Okay, finally, let's discuss the most exciting part, closing on your home. As you prepare for closing, you're going to conduct a final walkthrough of the property to ensure everything is as expected. If the seller agreed to make repairs, this is the time to check on those and make sure everything has been completed. Just a note, closing costs can add up, and they may not all be included in the final amount that you're going to bring to closing. There could be costs outside of that need to be paid up front, like maybe the appraisal or the inspection for sure. Make sure that you know who pays for what and when, so you can budget accordingly throughout this whole process. On closing day, or maybe a couple days before, you're going to sign the necessary documents and transfer ownership with a deed. Once that deed is recorded with the county, you'll receive the keys to your new home. Congratulations, you did it! You're a homeowner and you ditched your landlord.
That is such great information, Chelsea. To recap, we've covered 10 major steps in buying a home. Introduction to home financing, understanding your credit score, budgeting for your first home, types of mortgages, the mortgage application process, finding the right home, making an offer, home inspection and appraisal, securing financing, and closing. Remember, buying a home is a journey. Stay informed and ask questions, and rely on your real estate agent for guidance. Follow best practices, stay organized, and refer to additional resources for further learning.
Thank you for joining Ditch Your Landlord, your guide to buying a home without losing your mind. Best of luck on your home buying journey. We've enjoyed giving you an overview of buying a home.
We would love to share more with you, including home buying checklists and timelines, recommended websites for property search and mortgage calculators, and contacts for other housing professionals, including inspectors and other service providers you might need. If you have questions or would like more information, we would love to connect. Give us a call today. You can also find us on all major social media platforms.
Remember, buying a home is a major process, but it is achievable. You can ditch your landlord.
Thanks, everyone.